Hello everyone, Shane Newton here with Keller Williams, your trusted real estate consultant with over 25 years of business experience in real estate, consulting, and corporate finance. Now if you need assistance with your real estate needs, whether it be buying, selling, or investing in real estate, please reach out to me. You can see my contact me at my information, which is listed below, or it's also listed at the end of the video, and you can get it there. Now today what we want to talk about is buying power due to interest rate fluctuation. And I mentioned this a number of times in my market update videos, how buying power is increased with the lower interest rates. Now what exactly does that mean? Okay, so today let's look at it as an actual example to show how these interest rates lowering increases your buying power. Alright, and in this example, we're going to look at a 30-year fixed mortgage. Okay, at a $300,000 home, we're going to put 5% down, 3% interest, and we're going to amortize that out over 30 years. Now also when we factor in our payments, there are two other things we have to consider. We have to consider property taxes and property insurance, because those are going to be escrowed with our payment. Okay, so when looking at property taxes, we're going to use 2.5%. Now it varies based on the city and the area that you're in. There's certain things you have to take into account, right? Each city has its own tax rate. Various cities and counties have different things they take into consideration. Dallas County, you're going to have extra for the hospital district. You're also going to have a little extra for the community colleges. Same in Tarrant County. Denton County doesn't have that. But you may live in a new area out like around Aubrey and some of those areas where city resources and utilities haven't necessarily been set up for the area until this neighborhood was built, and there may be a PID attached to that which could affect your property taxes. We're not going to go into that deep a dive. We're just going to use a 2.5% rate for property taxes, and then we're going to use about $1,500 a year for property insurance. So for that $300,000 house at 3% interest over 30 years, we're going to have 5% down. We're looking at about $1,201 in principal and interest. You take the 2.5% in property taxes, that's about $7,500 for the year. But monthly that's going to be around $625. And then the $1,500 a year for insurance, that's going to come out to about $125. So that gives us a monthly mortgage payment about $1,952, we'll say somewhere in there. Okay, so now how has that impacted with the change in interest rates? Okay, so at 3% we have the $1,952 for our monthly payment. But at 2.8%, it drops over $30. So at 2.8%, looking at my calculation, the payment actually becomes $1,921. It saves us a little over $30.50 a month. Now, it may not sound a lot, like a lot, that $30, but it could be. And especially over time, if you look at that money and factor out over 12 periods for the year, that $30 times 12, that's $360 a year. Times 30 years, that actually gets into a little bit of money. But where we're really looking at it is in terms of what it can do in terms of the house you can buy. So we're at $300,000. Well, that $300,000 home at 3% interest actually becomes a little less than $305,000 at 2.8% interest, and you have the exact same payment. And it may not seem like a lot, but it may be the difference between getting a house that has a feature you like versus one you don't. Or being able to get into a multiple offer situation where you actually have some room to make a little bit higher offer to get the house that you want. And that's what I mean by buying power. Just that 20 basis points of going from 3% to 2.8% is, almost $5,000. That's buying power. That gives you a little bit more. And let's say instead of you actually have good credit, or very good credit, so instead of 3%, you're looking at 2.5%. Well, now you're looking $10,000-$15,000 difference in what you're able to buy, and that's significant. I did another video earlier, a couple months ago, where I talked about the difference in terms of full percentage increases. And let's say a $250,000 house at 5% would actually, if you lowered that to 4%, that gets you about a $283,000 house for the same payment. And if it goes down to 3%, that house actually becomes like $311,000 or $318,000, somewhere in that range. It's over $300,000. So between a $250,000 house at 5% interest now becomes over $300,000 house at 3% interest. That's significant. And that's what we're talking about by increased buying power with these low rates. And these historic low rates, they are historically low. If you're thinking about buying, now is a good time to take advantage of those. Because if you look over the history of since the Great Depression, historical interest rates for mortgages are in around 7%, somewhere between 6 and 7%. So we're at half of that now at 3%. And according to the Fed, they're not planning on raising interest rates anytime soon in order to get the economy going after COVID. So the rate should stay in this area for probably the next year. They said they weren't going to consider raising rates until at least 2023. So now that could change, but obviously if they're planning that far out to not raise interest rates, it's going to be a little while that rates stay at this low level. It's a good time to take advantage of them. Hope you liked the video. If you do, hit that like button. If you have any comments about the video, put those in the comment section below, including if you have any particular topics you'd like to see us cover in our videos. If you're watching on YouTube, be sure to hit that subscribe button. We release a video every Thursday at noon, and we also do a market update every Monday. Usually comes out Monday afternoon, but it'll come out sometime Monday. Again, I'm Shane Knutson with Keller Williams, your trusted real estate consultant. If I can help you in any way with your real estate needs, whether buying, selling, investing, or even looking for a good trusted contractor for some of the needs around your home, please feel free to reach out. My contact information, again, is at the end of the video. Thanks again for watching. Have a great rest of your week, and we'll talk to you soon. Thanks, everyone.